All right, good morning, fellow traders. This is Pete Soros. It is Thursday, July 15th, just around 10 a.m. Eastern Standard Time. What we're going to do is talk about the dollar yen today on the 4-hour compression. Now, in this setup, particularly, we're not going to be able to trend this market because we can see that we're dealing with a market that is absolutely not trendable. We can see this at this time. And we're coming off of a rather large sell-off coming up here at the 81.50 price level. Okay, and we can see that it has sold off just over 300 pips down to the down to the 78.40 price level. Now, again, we can see that there is no data in this area that we can trend, but basically what I'm going off of here is different types of technical analysis. One is going to be in my smaller compression looking for bullish patterns, okay, and furthermore, just want to take a look here and see overall what is going on. Now, there's been a lot of talk in the market lately about potential BOJ intervention. Okay, and there was a spike up this morning to around the 79.60. A lot of people, traders, saying that that could possibly be the first get-go by the BOJ for the intervention. Now, the reason why I'm interested in buying this pair is not due to the rumors in the market, but due to the fact that this pair has become out of range, and we definitely need to see this market self-police itself and bring the pair back up. Okay, so again, the market essentially is what the traders are doing. I anticipate that there are the rumors of the intervention coming around, and traders are going to position themselves wanting to get in early for this movement, hoping that in today's Asian session coming up that the BOJ will step in and we will see a very nice movement north on this pair. So first off, what we're looking at is this overall movement that we can see from coming back from March. Okay, now you can see that we're sitting at a significant 786 Fibonacci retracement level, which is the last line of defense for this pair. And notice the attempts to bring this pair up that we saw at the 61.8. We've seen many attempts, and then we saw the fall through down to the 786. Okay, so I'm just taking a look here at the 4-hour. We can see at this level here, notice the massive buying that occurred off of this level. We saw a 4-hour candle take it up 100 pips. Okay, and now currently what we can see once again is this same type of market movement occurring at this level right here. We've seen the market do 100 pips again in just around 4 hours. Now again, what I'm looking for here is going to be in the smaller compressions. Okay, so just taking this down one step at a time. Let's go here to the 1 hour and see what is happening. And what we can see here on the 1 hour is that we have a very dominant single line trend line, okay, that has been broken by the market, and we have seen that the single line trend line, which is showing the supply in the market, has been broken by the market and has seen a very nice breach of the market. So that means that demand is back in play for this currency pair. So we're now looking for opportunities to take this pair north. Okay, so furthermore, we can see that break. We can definitely see how nicely the market broke right through it. From this point, we saw sideways movement. Remember, we came into the sideways movement north, so we're looking to exit the sideways movement north. So what we can also do at this time is we can go ahead and take this movement right here from the bottom up to the top, okay, and we can grab our areas of Fibonacci targets. Okay, so just taking a look right now, what we can see is that we have our set of Fibonacci targets, and our ultimate 1270 is sitting right here just above the, just at the 81 price level. So going further into this, let's just take it down to the 30-minute and see what we have going on here on this pair. And here it is becoming more clear, that sideways movement that we were talking about. But also, when you take a closer look, you can see that this is a bullish pennant that is formed right here on the 30-minute chart. And taking out of consideration the spike up in the market and connecting these tops right here, we can see that this market has broken through, once again, significantly through this bullish formation in the market. So that is what is leading me towards continuation of the current movement north that we're seeing. So there is the pennant that we can see, the bullish pennant on the pair. Okay, once again, we have very nice movement coming out of it, consolidation coming and sitting right here within this area during the London session. And now the New York market looks like it's going to buy this pair back up to the levels of range that this market needs to be in, because there's definitely no equilibrium in this movement. Okay, we've seen, notice how large this movement is, and notice the sell-off that we have seen. So we definitely need to see this market self-correct itself and come back up. Now, taking it down to even smaller compressions, looking at the 15-minute compression. On the 15-minute, we can see a nice line of demand, a single line trend line coming into play here in the market that is showing respect throughout the movement. So we can see here's the first point. Okay, we have respect off of the first point, off of the second point, off of the third point, and now we're sitting right here at the fourth point. And this is where I took my first entry, and the reason why I took my first entry is because not only the bounce, okay, but for the potential here of profit on the pair. And not only that, it was the amount of risk that I had to put on the board. Because when I was entering here at the 78.95 price level, okay, I placed my technical stop below the last point of support on the chart that I was trading off of, and you can see that my stop was here sitting at around the 78.85 price level. So I had no more than 10 pips of risk on this pair, and now what you're going to see is the levels that I'm looking to take this pair to. Okay, so this was definitely a no-brainer trade for me with absolutely no risk on the table. And what I do is I major in risk and I minor in reward and let my reward take care of itself, making sure that I'm protecting my account so that I have an opportunity to trade yet another day. So let's just go ahead here and continue to build up on some information. So what we want to do now is we want to look at this last little uptrend that we had right here and look for any data that we can get off of it, okay? And first off, what's important to realize here is that you can see when grabbing your supports here in this market, okay, that there is our first level right there. Now this is the bottom of the trend, so we're not necessarily interested in that. What we want to do now is we want to look for supports throughout this area here that potentially are going to create confluence overlaps at areas in this market that we can look to trade to. So let me just take this off. Okay, so what happens here is we are going up, okay, and we can see a pullback right here at this level. Now this is our first level of support in this market, okay, and notice how it also is lining up with these other areas right here. So anything above this is now not going to be areas that we're going to look for. We're going to look for pullbacks off this, because this point right here is our new high. So this right here is definitely a support area, because this is what allowed the market to create a newer high. And we can see when taking this area, okay, that at this level right here, we are seeing an overlap of the 61.8 Fibbo target. Now, when the market breaks the top of its initial movement, being here at the 79.60, we have a 90% statistical chance probability of getting to that 61.8. And since it is overlapping a PSR right there, well, we have a very high probability of achieving that level. Okay, so furthermore, what I'm looking for here overall on this pair is I'm looking for the pair to continue to move to the north, and I'm going to look for my first target of profit taking to come in here at the 79.95 price level, which is the 270 overlapping a PSR. And furthermore, I'm going to adjust my stop at this level to try to pick up the extra 30 pips to that 80.25 price level. Okay, so again, the entry on this pair was taken by a break of the bullish pennant that we saw on the pair. Once again, just taking a closer look at that. Okay, there was the pennant on the pair. Okay, and also from the fourth bounce of the single line trend line, which was showing demand coming into this marketplace. Now again, only risking a little bit over 10 pips on this pair and looking to take it all the way up here to the minimum 79.95 price level. So you have a 1 to 10 risk reward, and if that is not a good opportunity, then I do not know what is. So that's what we have here on dollar yen. Hope you enjoyed that. Until next time, folks, good luck and happy trading.